Good morning, everyone. How are we doing? Here we are again on Tuesday, and it's like nothing happened. What's up, Raj? Hey, Stealth. Hey, Trademaker. Good morning. Ah, what a market, eh? What's up, Jiraj? So, I'm not sure what the news cycle says right now. Um, so I have to completely trust the chart. And the chart's telling me there is a massive short position basically right here. There's a really big short position. We'll show it in detail on the next chart. It's well, first of all, overnight inventory was short. All of the trading's underneath the close. It's adjusting higher, right? We have the overnight high, which is now up here where the previous day high is, and we have single prints again. So we've got a couple of short positions, my friends. Okay? We have people who are short. Now, you're going to ask me, JJ, how do you know this? Well, because I get paid a lot of money to trap shorts, right? And I have my whole life in this business. In 34 years, if people want to do a short squeeze, they'd call me, and I was a specialist that they would bring in. So I understand the mechanisms of shorting and how to break a short squeeze, how to squeeze them. All of that stuff is stuff I know intimately because I've done it. And so when you've done it, you can see it being carried out. Now here it's not being carried out because of manipulation. Here it's being carried out because of human nature. And let me tell you something. I speak to quite a few people every day, and a lot of traders, they'll get sucked into the news cycle on a Sunday night. You know, over the weekend they blast out a whole bunch of bad news, and this has gone on for now 3 days, 3 weeks in a row. Hey Dave, how you doing? Uh, I owe you a phone call after the session, Dave, if you're still around. Um, so what happens is people get influenced by this news, and then they short the living crap out of the market the next when it opens on Sunday. So we had a gap down, right? I left the overnight inventory from yesterday, and then of course we get a little bit of news, and we got that news around here, and boom, you get this massive move up. So we have people who are short underneath 66.96 who added to it between 96 and 73.35. So this is short one. This is the add. This is where they go into cover, right? And some of them will short more up here and try and cover off a little bit here. And that's why the overnight inventory was short. Because after a big move up, the overnight tends to sell off so the short sellers can go get some cheap supply, right? After a move down, you usually see a move up in the Globex. After a move up, you see a move down in Globex, right? It's to balance out the positions, okay? Hey, AO, how you doing? How's everyone on YouTube? So now we're backfilling. Took out the previous day high, back down. There's going to be short bids here. I'll go and show you that. We filled a portion of the single prints, but at night. So it doesn't really count. If we open above 67.75 in RTH, then those single prints are still valid. What does that mean? It means the early birds got all the cheap supply. So if you were bid at 3 in the morning, 2 in the morning, you got 6,700 product. Now there's nothing for sale under 6809. Get it? Right? Early bird special. That's what that is. Hey, Howard, what do you say? Do I think it'll play out like Judgment Day? I was kind of hoping it would, right? I was kind of hoping that I was actually thinking that it would go down here and kind of get down to 64.85, right? Flush out all this, but this move only lasted for a day, right? The problem is every time we come under this 66.21, we get a look below and fail of 66.21. You guys see that? That means the overhead inventory above 6,800 is pretty damn sticky. Sure, you get margin call selling and stuff like that, but the buying retention over 67.49, over 6,800, right? The buying retention over those levels isn't that bad. It's actually pretty good. If I was a stock promoter and I was paying somebody to bring buying into this stock, and I was distributing for like 6 months above 6,800, and every once in a while I'd have to put it on sale down to 66 and then pop it right back up in a day. Geez, I'd pay that. I'd pay that promoter all day, every day, right? If he wanted 20%, 30%, I'd pay him without even thinking about it, right? By the way, what I'm talking about, folks who don't know what I'm talking about, is in penny stocks, you pay people to bring buyers into the market, right? So you pay people to bring in buying. So if you bring in $1 million worth of buying, I'll pay you 200 grand or 300 grand and keep 700 for myself, my clients, right? That's how it works. I would say that 66.21 is not getting weak. Now, there's a reason for that. What is your name? Vox? Vox. I'm just going to call you 21, okay? You guys have these really complicated screen names. So 21, welcome to the stream. I don't think it's getting weak. Now, there's something else that's going on here that nobody's really thinking about. We have contract rollover coming up in what, 10 days? 5 days? Am I right on the dates there? Where we have contract rollover? Great question, Sean. I'll be right with you in a second. I'm trying to coax an answer out of the room and everybody is asleep. Contract rollover. Guys, wakey, wakey. Time to make the donuts. Right? So we have contract rollover, right? Thank you, Trademaker. 16th. What has to happen before the contract rolls? Should I play the music from Jeopardy? What has to happen? Shorts have to cover. Okay? Short sellers have to cover the old contract. Okay? Right? The new contract is trading at 68.63. Right? They got to get out of this 68.11 product, right? Before the roll. Okay? So there you have it. That's big short covering. As soon as the president, what did he say yesterday? The war is almost over. I don't know what he said. Something. He's always talking. He said something, and we just saw a huge face rip off short cover, right? So that's the thing. Okay, that's the thing. Now, good question about the look below and fail. How do we know that the price still won't fail? That is why you have. So, Sean, let me ask you, what is your time frame for the trade? See, this is the thing about these trades. If you only need, for me, I need 30 seconds to 90 seconds for the price to hold, for me to get in, get out, make some money. You know what I mean? So I don't care if it fails after 90 seconds. I get in, I get out, I get paid. Then the price can do whatever the hell it wants. Let me show you. Right? Now, if you're a longer term trader, you need time to accept over a level. Right? And if you come into our room, right, little plug for the old trading syndicate, where I teach every day. Like yesterday I did a couple of sessions, just impromptu, right, to show you different things. So say for example, if we're looking here, this is a look below and fail of 68.14, okay? So if we're going long here at say 15, 16, we put our stop here under 14. Now we know that there's going to be a seller up at 18. So for this particular time frame, if I'm long at 16, I've got a sell order out at 17 and a half, 17 and 3/4. Okay? Because I know damn well that there's going to be a seller when we get back up here. So if I am long, I go and I mark my seller, right? So I go long at 16 or 15 or wherever I could get in. I put my stop under the bottom of that candle, this one here, right? Long, stop. And now, look, there's a seller here. So I'll put my sell order, say I buy 3 contracts, I'll sell one here, and one before that level. If it starts coming back on me, I'll get out of the trade. My stop is here. Right? Now I only need maybe a minute or two to pull off this trade. Tops. Because it's going to work quickly or it's not. And I'm watching that offer. Now I know that there's sellers at the top of those 2 candles are exactly the same. So there's the lift. So I'm out of 1 contract. Right? So I've been long 15 and a half. I sell one at 16 and a half. I put another offer out at 17 and another offer out at 17 and a half. I'll be out of this trade before 18. Now, that's not a lot of meat on the bone, but hey, that's what we have to deal with right now. Hey, Fazro, how you doing? Right? You got to trade what the market gives you, right? I might want a 30-point trade, but hey, at 3 in the morning in New York or 4 in the morning in New York, all I'm going to get maybe is 1.5, 2 points on this particular trade. And I'll use my orders to tell me whether the trade is working. So if I have a 17 and a half offer and it does not execute, right? If I have a sell order that does not execute, what do? You lower the price that you're asking. You're selling, maybe, maybe you have a 1982 Trans Am and you're trying to sell it for 25 grand. Nobody's buying it. You lower the price, right? Remember, it's a market. Okay. How long do I stay in the trade? Well, it looks like it's kind of choppy here, and I know that there are sellers at 17, 16 and 3/4. See, watch the offer. Let's make this bigger. Watch that red line, right? Now you know that there is a seller here. So you watch this red line and this white line. And if this red line lifts over the white line, then you know the buyers are coming in and the sellers are raising price. See? Boom. There's 17 and a half. Right? So say you were still long a couple of contracts, start selling. Pitter patter, let's get at her. Right? Don't let the grass grow under your feet when you're in these markets. If you're long 15 with a 14 and a quarter stop, 14 stop, sell a little at 16, sell a little at 17. If you can get a print at 18, beautiful. If you can't, just take the money, right? So worst case scenario, you average maybe a point and a half on 3 contracts, right? On the mini, that's not bad money. That's $75. You know, it's a couple of $100 on 3 contracts, right? It pays the cell phone bill, right? Now, if you're looking for higher, right? If you're looking for a breakout over 68.20, right? You need to understand that there is inventory above us, okay? And I've got all this stuff in the wrong area, right? There is inventory above us. So if we break that previous day high, right? The large traders are going to sell into this. Why? Because when you break that high, you run stops. When you run stops, it creates buying. When you create buying, you can sell more into it. If they see buyers, then they will raise the offer over 19 and a half, 19 and 3/4. Watch the offer. That's why breakout trades are difficult, because the breakout is where size traders sell in their product. Because they're long down here. The point of control and the overnight is down here at 67.85. Your inventory from the overnight session is between 82 and 91. So you'd be a fool not to sell it at 68.18. If I was long 500 contracts from down below, I'd be out of 80% of my position now. See, look how it went above yesterday's high and came back down, and it's working that level out. So that really is tough to go long looking for a breakout, because everybody's selling into it. See how they're selling into it? Because that, my friends, is how you distribute size. And the purpose of a market is to distribute size, right? The purpose of a market is for size traders to sell their inventory, right? Just like a guy who sells hot dogs, he wants to sell all his hot dogs, right? You sell donuts, you want to sell all your donuts. You don't want to have donuts, stale donuts that you got to throw away at the end of the day, right? You need to turn your inventory back into cash. Hey, what's up, Doc? How's the neurosurgery business going? Pretty cerebral. uh, so it's, you know, trading breakouts. I hate trading breakouts. I don't mind trading a breakout in RTH when you get, when you got a lot more customers in the store, because that'll create a little bit of, oomph and follow through. But now let's see if we hold 68.14 on the way back down. Okay? What the goal of the evening is to take this inventory from 67.85, right? We want to take this chunk and we want to go and sell it up here, right? Now we have shorts that are trapped here, right? We have shorts trapped under 68.06 all the way down to 67.95. Oh no, not 67.95. Sorry, it's right here. Right, where we took the high. See how we opened and then plunged? So everybody was using that 6,800 as a stop. That's where the shorts are trapped, right? So there's a stop here. Okay, and then we have this big short position all the way from 67.77 all the way down to 67.41 half. That is a massive short position, 41 quarter, right? Where there was a little bit of supply at night, but all that supply is gone now, baby. Right? If you understand how these markets work, you just need to have a rudimentary knowledge of how inventory works, right? So now if you're shorting, right? Now if I'm interested in a short and I'm taking, let's go and sell, geez. If I go and sell 13, 14, oh, now I'm going to probably just scratch that. Yeah, I scratched that, right? Bad trade location and I was too early, right? If the market accepts over 14 and a quarter, there's no reason for me to be short. So I went and hit a 13 and 3/4 short and I just covered it right away, right? Because I was like, oh, too quick. Wait until it offers under 14 and then take a short. Put your stop at 14 and a half, right? So if I do it again, see how the offer is lifting? Almost got me again. Come on, sell it like you stole it, you bastards. Right? Put it on sale. So short 13 and 3/4. I'll put a 12 and a half bid and see if I get hit. Filled at 12 and a half. Okay? Now I'm just trading the micro just to see where the buying is and where the... This is where you stick your toe in the pool and see what the water's like, right? So I shorted 13 and 3/4 and I covered 12 and a half. Now, why didn't I hold that trade? Well, because now I'd be getting stopped out. Do you understand? That's a test trade. The first trade I took, I realized I was early and scratched it. The second trade I took, I put a bid down there to see if it would get filled, right? So now wait for the next candle, and if the next candle stays under 14 and a quarter, right, you could take a short, but if it starts going sideways around this area, stay away from it. And that's the hardest part, is to get some sort of tactical knowledge about when to short. See, the sellers, there's a seller at 15, just under 15, you see? As soon as the market got up to 15, somebody banged it back down. So there is a seller there. But they stopped selling here. They stopped selling here. Ooh. So it could just bop around between 12 and 15. Right? See, look. The sellers see buyers, they raise their price. When you mark where the sellers are, it's going to help you a lot because you're not going to go long until it clears 15. Hey Ian, how you doing? See, and I hate trading this because the candles are getting smaller, which means business is getting slower, right? The sellers have all the inventory down here. So they can sell it back and forth in a 3-point range. Their cost base is under 6,800. So whether they sell it at 14 or 13, it doesn't matter. And that's that chop that you want to avoid. So when you come into our trading room, we're going to teach you how to trade, but also we're going to teach you when to trade and when to avoid taking trades. This will keep you from getting stopped out. It'll keep you from being emotionally completely worn out, right? It'll keep you from all of that because you are not going to trade all these stupid things like FOMO and all that crap. So now if you want to go long and you're long 15, 15 and a half, 15 and 3/4, right? You know there's going to be a seller at 18, right? So go 17, 17 and a quarter on the offer, right? And if you're doing this to practice, that's great because that's what you should be doing because you're getting a sense of how price moves. So long 15 and 3/4, I can't get a 17 fill, so I'll move my offer down to 16 and 3/4 and see if I get taken. If I don't get taken, I'll hit the bid and go home. Now you're thinking that's not a lot of money, JJ. So I sold one at 16 and 3/4 and the second one at 17, right? And I'm flat. But what I'm doing is I'm trying to teach you guys how to put trades in and how to use your orders to tell you whether or not your trades are working. Because all of you guys look at a chart, but you won't know if your trades are going to work unless you put orders out. And that is how large traders trade. Right? Now, if we stick the previous day high, right, we will start rotating higher, right? We'll start rotating higher. The next stop is going to be around here at 68.36 because that's where that untraded point of control is. There's inventory here, so there's supply up here in that 35.36 area. So London's opening. So if London opens and can't get lower, it will rotate back up. London's going to try and find the bid now. Once it finds the bid, right? I'm long 19 and a half. Out one at 20 and 3/4. Not the greatest trade. Not the greatest trade. And I'm flat. Sold it too early. So that's cost basis, 2 times cost basis, and now we're going to go 4 times cost basis. These are profit zones, right? So what did I say? 68.39. Yeah, it's kind of halfway up. So now the shorts are trapped underneath yesterday's high. That's why there's buying there. So there'll be some distribution. If they can hold price steady, it will attract buyers and you'll get this. If they can't hold price over 18 and a half, it will drop down and that low will drop down here under 14. So those are your scenarios. Yeah, I haven't even looked at oil. Where is CL? 85. Good grief. Poor bastards who went long this over $100. Oof. That's ugly. That's very ugly. Oof. This market does not take any prisoners. I'm telling you, folks, if you want to learn how to trade and you don't know what you're doing and you're fumbling around out there, we've got a 3-day free trial going And then it's only $19 a month. And I promise you will learn more in a month with me than 10 years anywhere else. In one of these fakakta trading rooms where, the guy used to make pizza and then now he's teaching people how to trade. So if you don't know what you're doing, or even if you're a larger trader and you're having trouble managing risk, managing size, come give us a shout. You know, trading size is not all it's cracked up to be. It's difficult. So I'll teach you how to trade size. I've traded, how many of these people in these trading rooms, not to be rude, but how many of them have ever traded out 180 million shares over a 2-year period of a deal? How many of them have actually made a market, created buying, sold 2, 3, $400 million worth of stock into retail, right? Come learn from a creator instead of somebody who's pretending, right? It'll be worth your while. We will teach you the way. Oil is the new silver squeeze? Yeah, they're not squeezing it too much there, Raj. I think they let go of the squeeze. We'll see what the next steps are, right? It's probably, it's Act 1 in oil, right? Yesterday was Act 1. Let's see what Act 2 brings us. Right? These markets are like a 3-act play, right? That's okay, Dave. Don't worry. I had good news from our friend yesterday, so we're locked in and loaded. Australia? I don't know if it's Australia, Ian. I think it's Europe and London who are short. And they got no choice but to buy it, you know? It's I'm telling you, this is not an easy market to trade. And we're going to do everything we can to keep you guys on track. Now, on my 4-hour candle wax chart, I have a level here at 68.29. And these levels have been pretty good. Like that 67.14 worked like a charm. So let's see if we get a little resistance at 68.29. Okay? Joe Mama, are you the Joe Mama off of Twitter? Are you the same lady? Yeah, they don't want to cover, but they have to sometimes, Dave. Sometimes they have to. Oh, okay. There was a lady on Twitter, and her name was Joe Mama. She was a nice lady. I haven't seen her in years. Oh, okay. So what's happening now? The shorts who are trapped under 68.18 and a half are holding the market up. And they're allowing the size traders to unload their product up here. Right? So every time we come down to that 18 and a half, look at the bid. Bing! See? But what you want to do is you want to rewind this and get used to this kind of price action. As soon as it came down here, right, the price looked like, when you sit on a chair that's got a nail sticking out of it, you jump, right? It just happened. See, there's 18 and a half. See? So if you were shorting 22 and it gets down to 18 and a half, you know they're going to be buyers there. So cover your short. That's how you use this information in a practical manner. Because people who have all these esoteric trading principles, when you get punched in the face, all that crap goes out the window and you forget everything. Keep your trading simple. Keep your execution simple. Right? Know where the bids are. Know where the sellers are. Now we're in uncharted territory. Let's go find out where the seller is going to step in. Right? This is short covering, my friends. This is what we call emotional. They call it emotional. I call it forced. This is forced buying. Because anybody who was shorting it as it came down to 18 and a half, thinking it was going to break 18 and a half, when it didn't, what did they do? Bing! They all raced to cover at the same time. Big green candle, right? That's when you get those big green candles, is when everybody goes to cover at the same time, right? It's going to happen over and over and over again because this business never, ever changes. Right through 29. Oh. Hey, hola Juan, what's going on? ¿Qué pasa? Back under 29. Let's see here. So if you're short this move, right? For example, if you're shorting the 26, 27, you're shorting that area. Where are you going to look for bids, right? You're going to be looking for bids in this 24 area, right? Short 25.88, covered 24 and a quarter. There's your bids, right? So look above and fail of 68.29. Your risk was up here. I was late. I should have shorted up here at 27.28. Oh, good stuff, Ian. Good stuff. Now just don't overtrade, okay? You're up 24 points on the session. Now just chill. Now your job is to keep it. How many trades on average do I take a day? Usually I take 2 or 3 test trades in every session, and then usually 3 to 5. So maybe 3 to 5 trades in Globex, 3 to 5 trades in RTH. Depending if my setup is there, if the opportunity is there, right? So when I'm trading for myself and my clients, I will only take certain A plus setups, especially in these markets. When I'm on YouTube with you guys, I'll do some test trading to show you guys what's possible, right? And to show you how order flow works. But I don't overtrade. I like to make my money and then get out. Now, I know a lot of people will say, "Oh, JJ, you don't press your edge." Well, that's okay because I trade for income. And at my age and my health and all of that stuff, I like to make some money and then just kind of chill. Now, if you're younger and you have a higher risk portfolio, and also if you have the skill, you can trade a lot more. There's nothing wrong with that. But most people overtrade and they don't know what their edge is, so they really don't know what to press. Right? I usually, yeah, like on those test trades, my risk is always structural, David. So if I'm going long, or for example, right, when I shorted that 25, right, I had my stop just here, top of those candles. Everything I do is structural. It's not like 2 to 1 or anything like that. So my risk is based on structure, and my sizing is based on the setup. Is it an A plus setup? Then I can go a little heavier. If I'm just scalping, I'll keep size low. You know what I mean? So I can be nimble, right? The other thing is, what is your level of conviction, right? If my level of conviction is high, right, like sometimes the market will come to one of my levels that I know I've tested, I've watched that level over and over again, then I can kind of size in appropriately. But at 57 years old, I'm very, very risk averse. Right? I don't like risking my clients' money or my money unless I know that the setup, that the business reason for the trade, the business reason for what I'm doing, it's got to be really, really like so obvious that it kind of reaches out and slaps you in the face. Well, it's nice to be called a youngster, Joe. I'll take it. No one's called me a youngster in a long time. So you can expect buying here because that's where they're short under they're trapped under the previous day high. They're also trapped under 68.20 because when London opened, boom, you get that big move up. Everyone's short there. When we came down to 22, you can see they front ran 20, right? It's all just mechanics. It's the same thing over and over and over and over. Yeah, that those 3 days off, Dave, really did help. Really did help. I've never been one to take vacations until the last 5 years of my life here. I've never been a vacation guy, so it's not bad, you know. I think these people who take vacations, they're stumbled onto something. So now we're going to distribute and we're going to try and move the cost basis, which is 2,036 contracts. It's down here. We're going to try and get rid of a couple of thousand contracts up here, and that'll move the value area higher. It'll move the cost basis higher. So what is the practical knowledge there? What that means is that you get good distribution. Here we go, coming down to 20. See how the bids are coming in as soon as we get down to that area? Now, will that hold? Let's see. Watch the offer. So had you been short 25 and you know that there's buying at 18.19, wouldn't you cover a few? Right? Because you'd leave 5 points on the table. Does everybody understand? So how you would have traded that is, say you shorted 25, you put your stop at 26 or the top of that green candle, right? And if you know that there's buying here, right? So you're short, stop, cover, right? And take those 3, 4, 5 points. Do you guys understand what I'm saying? Does that make sense to you? Is it simple enough that you guys understand it? And why would you have covered at 1920? Or not even 19. Why would you have covered at 2021 if you were short 25? Well, because it's back over 26 now and you're out money. That's why you have to get paid quickly. These are markets, these are trades that are quick trades. And a lot of people will say, JJ, that's too quick. I can't trade that fast. Well, learn. Improve your speed, because guess what, folks? This market is going to be very difficult. This is not going to be an easy market to trade. I'd say for the next 6 months, easily. Right? It's going to be very challenging, and you're going to have to know your stuff. Take the money and run. Just like the song, right? Classic song. Trading a higher time frame? It's great that you asked that question, David. And I'm doing a series in our room on how to trade higher time frames. Um, Trading higher time frames is great, but you need skill. You need capital, you need skill. You need trade management. You need to be able to interpret the market and see, is it a trending market or is it a back and forth cost basis market? Right? So if it's cost basis back and forth, then you're not going to be able to hold a trade unless you have very, very deep pockets. If it's a trending market, sure. Can we get back to Friday's high? Where was Friday's high? 68.54? Where's Friday's high? Isn't that Friday's high? I'll have to double check. If we get enough people trapped, we can go back to 7,000. I'll tell you something. If enough people shorted this thing going into contract rollover, we can easily get higher. So, David, are you? If you want, David, you can direct message me and we can talk about trading higher time frames. The methods are the same. The trade management is a little different. The other thing in trading a higher time frame is your business expenses are going to be higher, right? Just you're doing bigger business, so your expenses are going to be higher. So what I suggest to people to do when they're trading time frames, the higher time frames, is to manage their risk with size. How do you know when you're over trading? You shouldn't be taking more than 3 to 5 trades a day right now, Ian. It's pretty black and white. You should be at max, Ian, the way that we've taught you. You should be, your setup is not going to happen. Your trade setup is only going to happen. You should only be trading from the edges. Does that make sense? So how many times does that edge appear? If you're trading inside the range, right? If you're trading in the middle of a zone, you're over trading. Because you're just starting and you're just starting to get consistent. And what happens is as soon as people get consistent, right? Perfect. Then stop. You've had 5 trades today with the zones perfectly, right? Right now we're in distribution balance. There's no trade for you. So now just chill. Perfect. That's perfect. Yeah, let's see what happens. Yeah, so for you at this level right now, you should stop. A lot of people will say, oh, you should press your edge. But you are just learning what your edge is. So you really can't press what you don't know. So just chill, right? I mean, you're up, what, 24 points? That's great, right? Now, for larger traders who are more experienced, you can trade as much as you want. Just remember that you're going to pay commissions. Your business expenses are a little higher, right? If your trade setup is there and your level of conviction is high, go ahead, take that trade. Especially if you have good trade management skills, right? If you have good risk management skills, nothing wrong with that. Trade away. But let's say you're up $2,000 tonight, right? Say you're up $2,000. If it was me and if I was up $2,000 and I'm still trading and I lose $200, I stop. Never ever give back more than 10% of profits. That's bad business to give back more than 10% of profits thinking that you're going to make $4,000. After a while, your sharpness, your concentration is going to start failing you. That's why traders make, like I have a friend of mine, he's up like 4 or 5 grand and then he won't stop. And then he trades it all away and loses another 2. Right? Because He's made that money. He gets overconfident. His reflexes are slower. He gets tired. He starts making mistakes, and that starts compounding. So you got to think like a business person, right? You're up $1,000. You give back 100. Frickin' stop, right? What's the point of being a business person that gives back all their money, right? It's like you have a store, right? And you sell a bunch of product and then you go to the casino and you lose it all, right? You don't go to the bank and deposit the money. You stop at the casino and next thing you know, you're broke. Don't be a degenerate. Be a professional, right? It's a business. Take the money, and the money's not yours until it's out of your brokerage account. No problem, Juan, right? If you are a trader and you're trading funded accounts, as soon as you get a payout, take that money and get it the hell out of your brokerage account. Don't try and increase it or, double your brokerage account. Don't do all that stuff. Take the money out. The money is not yours until it's in your bank account away from your greedy little paws. Okay? Be smart, my friends. Okay? If you make $1,000 in a week, get it the hell out of your brokerage account. Right? Don't keep money in a brokerage account. It's the biggest mistake because then you start getting, your ego will start outpacing your level of skill and your common sense. Right? Don't let your ego take over your common sense. Right? That's when, you know, that's when things get dangerous. Right? Common sense always loses to ego. So get the money out of your account. Right? That's it. Another short position here, my friends. And we got a poor high. We got some selling here. I'm going to leave you, and we'll see where this thing goes. If we accept over 68.29, oof, this could get ugly. This could get ugly. That's a double top, eh? That's competitive selling at 31 and a quarter. Now we're going to backfill. Let's see if you can backfill and come back into these green single prints. If we do, there'll be a bid at 68.20. Thanks, everyone. Have a good morning. Be safe out there. We'll see you at 9 a.m. Eastern Time. In the UK, remember, we are at 1 p.m. for my next session because of the time change in New York. Daylight savings. Thank you, everyone. Have a wonderful day. Stay out of trouble. Bye for now.